Happy Friday 13th. You can make this a lucky day. And it's our trading day that's almost underway, and we want to get you ready for this day. Mies Schneider, Chief Strategist, MarketGauge.com, is joining us now. For the week, the S&P is down about 1%. It's been somewhat of a wild ride. Some of your themes that you're watching in your mind, like what do you think is front and center now for someone who's investing or trading?
First of all, hi, Nicole. It's so great to see you. You're right. It's so confusing. So I'm trying to keep things very simple. So if we start just with the overall macro and looking at equities, I always like to watch the consumer first and foremost in terms of what's going to happen, even if growth is getting a bid. And XRT, which is my go-to granny retail, has been not only under the 50, but under the 200-day moving average in what we call a distribution phase. It's also the only one of the key sectors that we like to look that is right below the 50-week moving average. This is critical. I think really just look at there. If XRT can get back over that 50-week, if it's not today, then Monday or Tuesday, that would be around 81.50. I think that would give everybody a bit of a sigh of relief. If it can't and it continues to go down, we're looking at KRE, held support, but of course that's also all reflecting private credit. We're looking at transportation, just hit the 200-day moving average. So those inside sectors are showing inherent weakness. So that's number one. Number two, of course, would be the whole inflation play. And I see things a little differently than a lot of other people there.
I was just reading how, I don't want to leave out the top story, which is oil, Strait of Hormuz, the Iran war now 2 weeks in, Saudi Arabia this morning slashing oil output by about 20% to roughly 8 million barrels per day. They're not the only ones. So I know we've put out the strategic reserves and things like that in the IEA. But how do you feel that this story, whether it's the war and or oil Strait of Hormuz, are you particularly worried about how it hits stocks and or our economy?
Well, yes, and we can already see the results of that. That's why we're talking about the consumer sector, because besides transportation, those two are really going to be the hardest hit by rising oil prices. So in terms of what's happening with the oil, as an old commodities trader, I can say that this type of volatility, first of all, is expected. Secondly, oil was already breaking out. If you look back at around $60, $62, if you're going at WTI. So it was signaling to us a month or so ago, even before the war really accelerated, that it was starting to get more expensive. And what, of course, the Iranian war did was bring it up to these levels over $90 a barrel. But if you look at the chart, it's hard to assess. So if I just wanted to say to people who haven't traded oil and want to get in, right now, $98 a barrel seems to be some kind of a resistance. And we're looking at support lower to about $82 to $85 a barrel. So right here where it's trading pre-market is kind of a chop zone. So you have to be a little bit patient. But yeah, I mean, people are expecting rates to go up because of the oil. But in the other commodities that have been dragged up, we're still not seeing those classic signs of a hyperinflation. So I'm also not quite as bearish as people are with the rates, thinking that they're going to skyrocket from here. I actually think that we're in a range, and it's very possible we might see at some point lower yields. Historically, we have seen rising oil prices and lower yields to protect the economy.